Good afternoon, ladies and gentlemen. Welcome to our special series of Market Masters, where you get to meet the finest brains on Dalal Street. And amongst the three most intelligent and practically oriented investors in the markets is Mr. Nilesh Shah, Managing Director and CEO at Kotak Mahindra Asset Management Company. Mr. Shah, over the last 33 years, has navigated all sorts of bull and bear markets in terms of volatility, in terms of fall and rise, and has created immense wealth for his unit holders. Namaste Nilesh ji, a very warm welcome to you. And at this time when the drums of war have sort of cooled down, how do you see sentiment on Dalal Street? Any thoughts that you would have on this 4-day conflict between India and Pakistan?
So शैल भाई, किसी ने बहुत अच्छा कहा है, अगर फितरत हमारी सहने की नहीं होती तो हिम्मत तुम्हारी कुछ करने की नहीं होती.
जी.
India has withstand a lot of terrorist activity of Pakistan, and finally we had to impose cost on them. The whole world has seen what kind of terrorist state Pakistan is and how maturely India has responded. So as a citizen, I am very proud that finally हमने चुप्पी छोड़ के imposed a cost on them. As an investor, I am proud that some of the companies in which we had invested in the defense space, in the engineering space, they have played a role in defending our country. Both as a citizen and investor, it is a matter of pride that we have behaved responsibly, we have behaved maturely, and we have shown to the world what is the difference between a terrorist nation and the democratic nation.
Nilesh bhai, since the conversation has begun on the stellar performance of the defense equipment that many of Kotak Mahindra Asset Management companies, investee companies have come up with, let's just spend a couple of moments here. In the last 1 month or so, there was hectic activity on the long side on every defense counter. After a 40-50% correction from their previous highs. Now, given the fact that India will replenish its war stocks and get ready for any eventuality in the coming years or so, how do you see the valuation matrix of India's defense listed space at this moment?
So the current rally has very well discounted potential fresh buying by Indian defense establishment.
Okay.
From here, for this valuations to be justified, companies will have to explore export market.
Okay.
Any company which is ready for futuristic warfare, in some sense, from tanks you are making drones, from planes you are making missiles,
Okay.
which has spare capacity and whose product is globally competitive, those companies will still create reward for shareholders.
Okay, let me just understand what you are trying to imply. So, expensive and difficult to procure weapon platforms such as fighter jets and tanks will now be on a lower priority compared with drones, missiles, and of course electric equipment makers. Is this what the market is thinking?
Undoubtedly, and it also includes electronic and electrical warfare. There will be companies whose satellites will be useful. There will be companies whose programming to understand those satellites will be useful. There will be circuit makers who will be useful. So, what was conventional warfare is moving towards modern warfare, and companies which have capacity and product which will cater to local as well as global market will have right to win.
Okay, okay. And Nilesh bhai, if I may be a little impertinent and ask, which fund within Kotak Asset Management Company would have a cross section of these potential stocks that you talk about?
So,
You don't
Shell,
have a defense product.
we don't have a defense fund, but across our portfolios, we
Okay,
have invested in companies between large, mid, and small. And
okay.
some of the companies we have been holding for last more than 10 years.
Okay, okay. That's an easy exercise. I'll do at my end, and then we'll check the results with you. So that's one part of the market that has come up. The other thing, Nilesh bhai, I have noticed, and a lot of market commentators have come up with that between the time the Pahalgam attack happened and maybe till over the last 1 or 2 days, foreign institutional investors were heavy buyers of Indian equity. This is at a time of distress. Because you have been in the market for so long and have addressed this FPI space very well, what do you think is going in the mind of the FII at this point of time?
So, one, I'm sure, like us, FPIs would have also been surprised by the resilience of our market
Yes.
as well as convincing victory of Operation Sindoor. Both those things are quite likely to re-rate India further. We
Okay,
are
okay.
already one of the most expensive market globally, and yet I dare say that there is potential of India to be re-rated as the success of Operation Sindoor has shown. Maybe the FPIs have also realized that it is bad news in which India supply will be available. If you try to buy India in good news, you will have to pay a much higher valuation or price. And hence, maybe they are looking to buy even during bad news.
Okay, so probably the bad news purchase is something that's reflected very well on the Indian market. And Nilesh bhai, we've already had record highs in two major parts of the market, which are roughly about 40-45% of Nifty, which is Bank Nifty and Financial Nifty. Given the fact that you talk about re-rating and the fact that Operation Sindoor achieved its objectives, do you think there is this chance or higher probability that on the Nifty we may see a fresh peak in 2025?
At this point of time, Shell bhai, the fundamentals and flows both are supportive to market. The March 25 quarterly results of about 109 companies delivered profit growth of 6% against expectation of negative growth of 2%. Now, good results come first, bad results come later. But net net, so far, results have been supportive. Second, both domestic and foreign institutional investors have been on the buying side. Of course, everyone won't like to buy at a cheaper price, but some people may just sit, kind of catch up the current valuation. Put together, earnings and flow both are supportive to the market.
Okay, so that's a very heartwarming thing to understand that FIs are buying. There is a chance to re-rating, and of course, there is supporting buying happening as well. Between the time you came last on Business Today, Nilesh bhai, and now, one good constant has been this very heavy, how should I say, faith that the Indian retail investor showed to mutual funds by either adding to his SIPs or at least not pausing them during the downturn. Now, with this fresh SIP money that is coming in and all this US trade issue, the FTA with Great Britain is in place, this conflict is over. Where do you think fresh money should be deployed at this point of time? What is the research team of Kotak Mahindra AMC coming up with in terms of sectoral plays?
One sector where we are fairly positive is consumption. This year, about 1 lakh crore worth of tax cuts will come in the pockets of taxpayers. They are more likely to spend money rather than save out of that bonanza. There is also potential that petrol diesel prices may be cut as globally crude prices have corrected. RBI has reduced repo rate by 0.5%. There is scope for more reduction. This in turn reduces EMI burden for housing and auto loan and personal loan borrowers. Somewhere towards 2027 calendar year beginning, 8th pay commission will put money in the pockets of government employees. Between income tax cuts occurring every year, potential petrol diesel price cuts, reduction in EMI burden, and 8th pay commission, you have visibility over next 24 to 36 months of consumption getting supported. Undoubtedly, this is likely to be consumer discretionary space rather than consumer staple. रोटी कपड़ा मकान शायद उतना नहीं बिके जितना experiences will sell. Airline, travel, tourism, healthcare, education. These are the places where we believe consumers will go to spend.
That's a very thoughtful process. Nilesh bhai, you've been a fabulous bond fund manager as well, and your ability to decode macro is one of the best in the market. When you look at how CPI inflation is easing, we've had crude oil prices at 4-year lows. GST tax collections are at a record high for the month of April, now above 2 lakh crores. How do you think the Indian macro balance sheet is at this point of time?
From a macro point of view, we are in a reasonably good shape. The fiscal deficit was on the way down. Monetary policy had room to ease, and that is being done. The easing monetary policy more than adequately compensates tightening fiscal policy. Reserves are adequate. Rupee is well behaved. More importantly, the government is focused on building infrastructure and supporting entrepreneurs. Overall, India does have its pockets where it needs to improve further, but which is why we have become one of the fastest growing major economy in the world. In 2014, we were 10th largest economy. 2025, we are 4th largest economy. In about 11 years, when you have jumped 6 spots globally, clearly there's something right happening in our country.
Okay, so how does this good macro impact the equity part of the market?
It's reflected in our valuation, which is one of the highest in emerging market. It is reflected in the reward we have given to the foreign portfolio investors. Undoubtedly, we have been one of the better performing emerging markets. So our top-down micros are reflecting into stock market return. Undoubtedly, Indian story is bottom-up entrepreneurship and top-down policy making. Can it be further improved? Answer is undoubtedly yes. We are growing at mid-single digit, but our potential is to grow at double digit. We should not be happy that we have scored a century when others aren't even crossing half century. We must aim to score triple century when others haven't scored half century.
Okay. Yes. Nilesh bhai, last time we spoke, it was 24th of February and the Nifty was at 22,500. Today it's at 24,500. So a clear 2,000 point uptick which the market has progressed into. when you look at your bias at this point of time in the market, uh, on on uh, on the large cap, mid cap, small cap argument, where is fresh money largely moving into as far as Kotak AMC is concerned?
So, as of today, Shell by this market is driven by flows as well as sentiment. Yesterday, there was a short covering and market spiked. Today, we are seeing some amount of selling pressure. Short term movements are difficult to predict. We believe while there are lots of good news for our economy, a lot of them is already priced into the market.
Okay.
Hence, stock selection becomes most important, and long term holding also becomes equally important. At this point of time, we still believe valuations are compelling in large cap. And when I say compelling, it's compelling from a fair value point of view, not from a cheaper point of view. Whereas the small and mid cap bearing few pockets still look little bit expensive. You will have to moderate your return expectation when you're investing at fair value. Indian markets will have ups and downs in the near term, but it has potential to reward long-term investing.
Okay. When you look at long-term investing and the fact that interest rates are moving towards the lower side, are there chances of the CAGR return of the market on the longer term improving for the better?
Shelby, I'm afraid not. The last 5 years return of broad market was about 16 to 16.5%. With inflation coming down, I believe next 5 years return will be much lower than that. It's impossible for markets to deliver real return in double digit. It's more likely to be in mid single digit or low single digit.
Okay, that is something that you've been saying for quite a while. I maintain, as you know, all records of all the interviews that we do with top fund managers. I think right about 12 months ago, you had said that the first thing that needs to be done now is to bring the expectation level of the retail investor down. लोग उस टाइम मेरे ख्याल से हर महीने पैसे डबल करना चाहते थे.
Absolutely. There was a phase in the market which I have popularly said, गधे और घोड़े दोनों दौड़ रहे थे और गधे घोड़ों से बहुत तेज दौड़ रहे थे. That's the time when you know froth is building,
Yes.
and one needs to bet on horses, not on donkeys, even though donkeys run faster in the short term.
Absolutely. What a wonderful thought. Nilesh bhai, now when you see the market from say 35,000 feet down, do you think that the froth levels, that unreasonable expectations, that rush for QIPs, that mad 20% circuits, all that are now gone? Do you think we are now on even scale?
Shelby, as long as human nature is there, there will be greed as well as fear. At this point of time, froth is limited, mostly in some of the controlled float counters. But rest assured, we will become greedy and we will become fearful as and when opportunity arises. The investment is emotional driven rather than rationality driven.
Fair point. And my final two questions, Nilesh bhai, today you have a shortage of time, but a final view on gold. The much awaited 1 lakh rupee per tola has been hit. Now, do you think gold should be a rational investment or it should be an emotional goodbye?
So, Shelby, central bankers around the world have been buying gold. They have accumulated about 3,000 tons of gold in last 3 years. Every buying of gold by central bankers takes away supply from the market. Many miners have sold gold in forward markets. they will find it difficult to deliver, and their supply also is kind of locked in. Put together, we still believe gold has upside. The Western world central banks are like 50, 60, 70, 80% invested in gold. Developing world central banks are 5%, 10%, 15%. Thanks to all the global uncertainty, more and more central bankers will continue to add gold, and that will support gold prices. Today, there was a news article circulated that in CERN's large collider holder, they were able to convert lead into gold. Now, that's a headline. Down below, it's been written, this was conducted between 2016 to 2018. It was only for a few seconds. It's only for, very small quantum and so on and so forth. When this kind of news comes, probably this is with a view to drive gold prices down, and it just shows desperation of bear. So I will say, continue to hold on to your gold. As long as central banks are buying gold, it will get supported.
Wonderful. And my final question, Nilesh bhai, this April saw the final goodbye from Mr. Warren Buffett, someone that you've admired over the last so many decades that you are in the market. Any thoughts that you have on Berkshire Hathaway, and of course, any lessons that you may have learned from the master himself?
So, Shelby, I could never visit Berkshire Hathaway AGM, but we used to read whatever he used to write and whatever he used to speak. The most important thing which I picked up from him at a very, very early stage, money is not everything in life. Money doesn't matter. But make sure that you have made enough money before you make such statement. So the importance of commercial part of life, importance of money, I think is very, very critically taught by Warren Buffett. Second thing, I also keep in mind that a person who was so accomplished, such a wizard, his India investment story was not that encouraging, which means you have to study. You can't rest on your laurels. Whenever you venture into new thing, you better study well. Otherwise, if wizard like Warren Buffett can fail in India, हमारी तो क्या औकात है. तो ये चीज भी हमें जमीन पे रखती है. We have to work hard, we have to study hard, so that we can be successful in our investing. We can't rest on our laurels.
Thank you, Nilesh bhai, especially the last statement about the master from the master himself. All of us know your track record in Indian equity markets. You have created phenomenal wealth for all your unit holders, whether at Kotak or Axis or much before that in Franklin Templeton. And with that, we'll end the show. Thank you so much for your time, and let's hope when the next time we meet again, which should be very soon, that Nifty is at a record high.
Thank you.
That, ladies and gentlemen, was Mr. Nilesh Shah, Managing Director and CEO at Kotak Mahindra Asset Management Company. He comes up with some remarkable observations that foreigners in India are buying at this point of time because they can only buy the quantities that they require at times when they are bad. So a dip in the market is when you see rising FI inflows, and during this conflict between April 22nd and till about last day, the markets have showed resilience, and so has the foreign institutional money. Apart from that, he believes that there is a rising chance of Indian markets being revalued higher, and the fact that you just might have a re-rating in India, mainly on account of this successful completion of Operation Sindoor and the improvement in the macro picture of India's balance sheet, as also earnings which are now sort of looking at good earnings growth. Apart from that, he's positive on the consumption theme, wants you to continue holding on your gold assets, and of course he talks about a potential cut in petrol prices and repo rates falling lower. I hope you enjoyed the conversation as much as I did. Please continue with Business Today Television. There's a lot that's happening on the other side of this break. Thank you.
On Saturday, my administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it.